We are Nifty Scalpers, Sandeep and Kavita, helping you become your best trader. Over the next few weeks, we've lined up a series of explainer videos, and today we are talking about index trading. Hello, Sandeep.
Hey, Kavita.
In our first episode of this explainer series, we want to spend some time understanding what is an index and how do we trade indices. You want to start with what is an index?
Sure, Kavita. So let me start with explaining what an index is. So an index is a measure of a set of stocks, a sort of weighted average of the prices of a set of constituent stocks, which eventually translates into one number, something like 11,000 or 10,800. And this is what we see on television or otherwise. The 10,800 goes to 11,000. So what it essentially means is the average price of these constituent stocks is going up or going down. So that's what it is.
So I heard you say that the price of each of these constituent stocks are weighted. But why is this important to know? How do you use it to make your trading decisions?
It's a good question. So it's important to know why weighting is relevant and how it works. Going back to Nifty, so we have 50 stocks now. As I shared in the beginning, that not all 50 stocks are weighted equally. What this means is, specifically in Nifty, the top 25 stocks constitute 80% of weightage, and the balance 25 stocks constitute 20% of weightage. So what it means is, if you are looking at stocks to get a sense of the index, so obviously the top 25 stocks are, should be more important to you, should be more relevant to you because they constitute 80% of the index. So if you're looking at making a trading decisions, you need to skew towards the set of stocks which have a greater impact on the index.
So that's really helpful. Thanks, Sandeep. Now, to get down to trading an index, we trade futures and options. So how does that relate to index trading?
Well, an index is just a number, which is like 10,800, 11,000, which keeps moving. But then in order to facilitate trading on that number, indexes or exchanges, more specifically exchanges, come up with products which would help us trade. And these products are basically called futures. That is one category of product. And then there's another category of product called options. So you could use any of these products to speculate on the index and take a call based on your analysis, whether if the index is going up, you may want to buy the futures. If the index is going down, you may want to sell the futures and so on. Either way, you could do the same with options, but options give you many more options. Essentially, these are your two trading vehicles or products through which you could speculate on the index.
Thanks, Sandeep. That's super helpful. At least we have a sense of what it takes to trade the index. Perhaps in our next podcast, we can speak a little more about what else do we need to know if we have to trade the index.
Yes, there's just the beginning. So we need to know a lot more, but then understanding the weightage, the fact that we need to give more, we need to focus more on the top 25, I think is very important for any trader.
Sure. Thanks.
Thanks, Kavita.